Hello, my friends. Jeff, Tax Rescue CPA. Today, I want to talk about Colorado income taxes, and I'm going to give you 10 things you need to know before you file your income tax return. All right, let's jump in. The first one is retirement income deduction. So this applies to many different types of retirement income. This includes Social Security benefits, pension payments, 401k, and IRA distributions, and also annuity payments. Now, there's some restrictions on this about how much can be deducted, and it's based on age. And then Social Security is kind of a separate animal. It has further or higher limits, and more of it is exempt from taxes. So be sure to check that out if you're receiving any of those retirement benefits. Okay, the second one is about the 529 college savings plan deduction. This is a really neat deduction, and Colorado is one of the states that allows the contributions, the money you put into the 529 plan, to be deductible on your state income tax return. Okay, so if you contribute $5,000 into a 529 plan, boom, that reduces your Colorado income $5,000. This is bonus. So the thing to know too about the 529 plan is the flexibility on what you can use the money for. What first comes to mind would be college expenses. And yeah, tuition, books, supplies, all those things you can use the tax deferred or tax exempt 529 money. But you can also use it for private school tuition for K through 12. So if you have kids in private school, you can use it there. And then this is a fun one. You can use it to pay your student loans back. So you put the money in and you get the deduction, and then from your income, when you deposit the money, you take it out tax-free and pay your student loan payments. Make your student loan payments, pay off the loan. So this one works really well. And keep it in mind if you have any of those expenses, because the savings can really add up. Number 3 is you got to know that Colorado has a earned income credit, and it follows the federal rules. It's 25% of your federal earned income credit, and it's refundable also. And of course, this eligibility, just like on the federal side, is based on the family size and the amount of income that you have. Okay, so if you for example, if you qualify for a $2,000 federal EIC, Colorado is going to provide $500, 25%. Okay, so next we've got the Colorado child tax credit. Just like the federal has a child tax credit, Colorado has one too. This one is for families with children under the age of 6. Okay, this is a much lower threshold than the federal. The federal is under the age of 17, but Colorado under the age of 6. And there's some qualifications based on the income level and about what percentage of this credit you'll get. The credit is $1,200. So be sure to check this out if you have children under 6 before you file your return. Okay, this next one I like. This is the charitable contribution deduction. So in recent years, going back a few years, the federal standard deduction amount has gone up. It was increased significantly, and this has eliminated a lot of folks from itemizing their deductions and taking a specific tax benefit or deduction for charitable contributions. But Colorado allows you to take the federal standard deduction plus a deduction for charitable contribution. So if you're making charitable contributions as a Colorado resident, keep track of them. Keep your receipts. This can be straight up cash contributions that you make, or it can be non-cash, like you're donating household goods to a charity, clothing, old things like that you're giving away. So basically, if you donate $1,000 to charity, you're going to get $1,000 reduction of your Colorado taxable income. Boom. Nice benefit. Okay, business and self-employed tax deductions. This is number 6. So here, Colorado offers a qualified business income deduction. Is similar, again, to the federal side. It's 20% of eligible business income. And this applies to sole proprietors, LLCs, partnerships, S corps, the usual thing. The next part of this business and self-employment deduction would be the pass-through entity tax deduction. And what Colorado allows is the state taxes to be paid at the entity level to avoid the state and local tax deduction cap that you have at the personal level. That can add up to a lot of savings. The other one to keep in mind is that self-employed folks can deduct their health insurance. The health insurance deduction, you can deduct the cost of your health insurance from your taxable income. Okay, here we go. So let's go to number 7. Capital gain subtraction. This one is really neat. Colorado offers a state tax exemption on certain in-state assets, the sale thereof. So if you have gains on these certain assets, okay, what kind of assets are we talking about? Real estate, partnership interest, or small business. And the thing is, they've got to be held for a long time, that much, 5 years. So for example, if you sell a small business in Colorado for $100,000 in profit, the gain, it may be tax-free under this rule, which again, huge benefit, real nice tax savings. Okay, so what about number 8? This is HSA account contributions, health savings account contributions. So Colorado follows, not every state does, Colorado follows the federal rules for SHAs, meaning that the contributions reduce your taxable income in Colorado, the earnings grow tax-free, and the withdrawals, when you pull the money out, tax-free if you use it for medical expenses. Though there are some limits to this on how much you can contribute each year, but keep this in mind. It really increases the benefit of HSA plans when you can also take a deduction on the state side. All right, we're getting down to it. Number 9, military retirement pay deduction. Now, this one is based on your age. It starts, or you become eligible for this deduction at 55. So if you're earning or receiving military retirement pay and you're 55 or older, look into this. And this could be a huge benefit because a certain portion, it's limited in how much you can deduct, but a certain portion, for example, 15,000 of it at age 55, not taxable to Colorado. Again, this could greatly reduce your tax bill. And number 10 is the adoption tax credit. Colorado offers an adoption tax credit that is a direct tax credit, reducing your tax bill up to $1,500 for adoption expenses. What expenses? Legal costs, court costs, adoption agency costs. So if you have, even if it's over, if you have, let's say, $2,000 worth of adoption expenses, you can take $1,500 as a credit on your Colorado return and reduce your tax bill dollar for dollar. There you have it, my friends. 10 ways you can take a significant chunk out of your Colorado state income tax bill. Who's doing your taxes?